So hello my dear students, now welcome to the second part of our discussion for accounting for business combination. Okay, so to start with, we have learned in our previous discussion that yung control of another company may be achieved either by acquisition of net assets or yung merger or acquisition of stocks or stock acquisition, yung consolidation. Okay. In this particular video, we shall be discussing acquisition of net assets. So we shall discuss acquisition of stocks in the succeeding videos or your next videos natin. Okay, so to discuss acquisition of net assets, so let us assume that the company to be acquired by the acquirer incorporated has the following stated financial position as of June 30, 2017. So presenting here is the book value, no, or the stated financial position of J&J company at book value. Okay, so it shall be noted that the total assets and total liabilities and equity amounts to 2.3 million. Okay, so also presented here is the total assets, liabilities at fair value. So, yung total assets at fair value niya is 3,265,000 and the fair value of the liabilities is 640,000. So, therefore, the fair value of net identifiable assets, meaning to say, the difference between the fair value of the net fair value of the assets and the fair value of the liabilities amounts to 2,620,000. Okay, so it is noted that there are accounts or there are assets and liabilities that differ, na nag-differ yung book value niya at saka fair value. Okay, say for example, yung cash natin, that's fairly valued. No? Equal yung book value at saka fair value niya. So, yung marketable securities naman natin, yung book value is 300 but the fair value is 330,000. Therefore, the marketable securities is undervalued by 30,000. Yung inventory naman natin, yung book value is 500,000 whereas the fair value is 550. So, therefore, undervalued siya ng 50,000. Yung land naman natin, yung book value is 150,000 but its fair value is 360,000. So, therefore, undervalued siya ng 210,000. Yung building naman natin, the book value is 750,000 but its fair value is 900,000. Therefore, undervalued siya ng 150,000. So, yung equipment natin is may book value na 400,000 but its fair value is 700,000. Therefore, undervalued siya ng 300,000. Also, may unrecognized receivables amounting to 225,000. So, kaya yun, the fair value of the total assets is 3,265,000. Yung current liabilities naman natin is at fair value, no? So walang difference yung book value at fair value. Yung bonds payable lang natin, may fair value na 520,000. No? Kaya may premium and bonds payable na 20,000. So undervalued siya ng 20,000. Okay, so that's why your total liabilities is 645,000. So those are accounts na nag-differ yung book value at saka fair value. And we always take note that, or we always remember that all the assets acquired and liabilities assumed by the acquiree shall be measured at fair value. Okay, so yung accounting procedures in the books of the acquirer, no? The record acquisition. So as I've said kanina, all accounts identified, meaning all identifiable assets identified and liabilities assumed, no, are measured at their fair value. So this is always the case even if the consideration transferred or given for a company is less than the sum of the fair values of the net assets acquired. So per illustration, the fair value of the net assets is 2,620,000. Okay, so if the total consideration given for a company exceeds the fair value of the net identifiable assets, no, meaning to say, sobra yung purchase price mo kaysa sa na-acquire mo na net identifiable asset, there is a goodwill. No, so may goodwill siya. However, if the total consideration given for a company is less than the fair value of its identifiable assets or net identifiable assets, then the excess of the net assets over the price paid is recorded as gain on acquisition. or bargain purchase in the period of purchase. So again, if the consideration is more than the fair value of the net assets acquired, my goodwill. If the consideration transferred is less than the fair value of its net identifiable assets acquired, then my gain on acquisition. Okay? So, yung accounting naman natin for acquisition-related cost, also all acquisition-related costs are expensed in the period in which the costs are incurred. So, except lang, if may stock issuance cost tayo, yung cost to issue equity securities, a reduction from the value assigned to additional paid in capital. Okay? So, we have here our first case. So, yung first case natin, what if yung price paid exceeds the fair value of the net identifiable assets acquired? Again, di ba, if yung price paid natin exceeds the fair value of the net identifiable assets acquired, there is goodwill. So, assume that the acquirer incorporated issues 80,000 shares. No, so meaning to say, yung consideration niya is equity instrument, meaning it issues its own shares to purchase the net assets of J&J Company. No? So, it issued 80,000 shares with a 10 par value, but its market value is 40 pesos. So, therefore, may excess na 30 per share. Again, we also take note that the consideration transferred shall also be measured at fair value. No? Then, the acquirer incorporated pays professional fees of 50,000. So, this is an acquisition-related cost, no? Which is a direct cost in relation to the consummation of business combination. Also, since the consideration is an equity instrument, no, or shares, there is a stock issuance cost amounting to 30,000 na na-incur si acquirer. Okay? So, how to compute for the goodwill? So, the goodwill is, of course, the consideration transferred less the fair value of the net assets acquired. So, yung consideration transferred natin, that's 80,000 shares times the market value of its share. So, we have 3.2 million as your consideration given. Less the fair value of the net assets acquired, that's 2,620,000. Therefore, may goodwill tayo na 580,000. And then, yung acquisition-related cost natin, yung professional fees shall be charged as expense. However, yung stock issuance cost natin should be a reduction from the additional paid in capital. So, how to record, no? How to record the acquisition, no, in the books of the acquirer. Okay, so to record, since the acquirer purchased the net assets of the acquiree, then the acquirer shall debit all the assets acquired, of course, at fair value, and credit liabilities assumed at fair value. So, in this entry, no, the acquirer debited all the assets acquired at fair value, including the goodwill, no? Yung goodwill na compute natin kanina, i-debit natin siya at 580,000. And then, i-credit natin yung all liabilities assumed, of course, at fair value. Then, since yung consideration natin is shares, so therefore, mag-credit tayo ng common stock amounting to 800,000. So, equivalent yan siya sa par value of the share. So, since common stock shall be credited always at par. So, you have 80,000 share times 10 per share. So, you have 800,000 as common stock. Yung difference between the fair market value of the share less the par, you should consider it as additional paid in capital. Okay? So, yung additional paid in capital natin, that's 80,000 times 30. 30 ito kasi yung fair market value ng share is 40. Then, may 10 par tayo. So, therefore, we have 2.4 million as additional paid in capital. So, to record the acquisition-related cost of yung professional fees, yung direct cost, shall be debited to acquisition expense amounting to 50,000, and the stock issuance cost amounting to 30,000 shall be absorbed by the actual paid in capital. Okay? And your credit cash for 80,000. So, what if on case 2, the price paid is less than the fair value of the net identifiable assets acquired? So, diba, if yung price paid is less than the fair value of the net identifiable assets acquired, there is a gain on acquisition or bargain purchase. So assume that the acquirer incorporated issued 20,000 shares of its 115 par value common stock with a market value of 120 each for J&J's net assets. So nag-issue siya ng 20,000 shares. The par value is 115, the market value is 120. So may 5 na additional paid in capital. So Acquirer Incorporated also paid professional fees amounting to 50,000 and it incurred acquisition and stock issuance costs amounting to 130,000. So first, we'll compute for the gain on acquisition. No, so yung price paid natin, that's the 20,000 shares times its market value, which is 120. So we have 2.4 million. Then yung fair value of the net identifiable assets natin, that's 2,620,000. So yung gain on acquisition natin is 220,000. So yung professional fees, that's still an expense. And then yung 130,000 shall be considered stock issuance cost, a reduction from the paid in capital. Okay? So you note here that the gain on acquisition, that's the difference between the price paid less fair value of the net assets acquired, which is 2,620,000. You have gain on bargain option or gain on acquisition or bargain purchase. Okay? So to record that one, still the acquirer will be debiting the total assets at fair value, then credit yung total liabilities at fair value also. Then yung common stock shall be credited always at par. So yung 20,000 shares niya times 115, that's 2.3 million. Okay? But yung additional paid in capital natin, 120 yung fair value, then 120 yung par, 115 yung par. Okay, therefore may excess na 5. Okay? That's 100,000. Okay? So, di ba yung fair value is 2.4 million, 2.3 yung par nun, 100,000 yung excess. Okay, additional paid in capital. Then, the gain on acquisition is 220,000. So, you've noticed, yung goodwill, it will be a debit, no? Then, yung gain acquisition, it is a credit. Okay? Okay, so to record for the acquisition-related cost, still yung acquisition expense natin, yung professional fees will be debited to acquisition expense amounting to 50,000. So, ito lang. No, since the stock issuance cost is 130,000, okay, but yung maximum amount natin na ma-debit sa additional paid in capital is equal lang to the incremental additional paid in capital. So, you take note that in this entry, additional paid in capital was credited only for 100,000, but the stock issuance cost amounts to 130. So, since di man kaya i-absorb ni 100,000 yung 100,000 ni APIC na incremental additional paid in capital, no? So, the excess will be recorded as stock issuance cost. It may be considered expense or pwede na siya reduction from retained earnings. Okay? Again, yung maximum amount lang na pwede i-absorb ni additional paid in capital in relation to stock issuance cost is equivalent lang yan siya to the additional paid in capital credited at the time of acquisition or yung incremental additional paid in capital in relation to issuing shares, no, as part of the consideration. Okay? Okay, so what if part of the contingent consideration is my contingent consideration? So, still using the data in J&J company, yung case 1, yung may the acquirer issued 80,000 shares at 40 per share, yun nga may market value of 3.2 million. So in addition to the stock issued, the acquirer agreed to pay an additional 200,000 on January 1, 2018 if the average income for the 2-year period of 2016 and 2017 exceeds 160,000 per year. So ito yung condition niya. So, yun, di ba, yung contingent consideration magdepende siya sa happening of a future event. So, if it so happened that the income of the year exceeds 160,000, then si acquirer will pay additional kay acquiree, no? Amounting to 200,000. But for recording purposes, the contingent consideration will be recorded in the date of acquisition will be based on the expected value, no? So, yung expected value natin is 100,000 since based on probability, 50% of achieving the target average income. So, yung based on probability daw, yung 200,000 na payment, may 50,000 probability, no, na ma-achieve yung target. So, in this case, we'll consider the expected value, not the agreed payment, which is 200,000. No? Okay, so we shall be using 100,000 instead of 200,000. Now, how do we compute for the goodwill? So, if my contingent consideration, it will increase the consideration transferred, no? Kasi considered naman din as part of the consideration transferred yung contingent consideration. So, yung stock natin at fair value, which is 3.2 million, and then estimated value of the contingent amounting to 100,000, we have total consideration of 3.3 million. And then the fair value of the net assets acquired natin is 2,620,000, giving you a goodwill of 680,000. Okay? So, na-increase ng value ng goodwill natin due to the contingent consideration. Okay? Yung acquisition-related cost natin, same thing. No, same ang treatment. Yung professional fees natin will be recorded as expense. And then yung stock issuance cost as a reduction. The acquirer shall debit the assets acquired, of course, at fair value. Then, i-debit din niya yung goodwill at 680,000. Then, i-credit niya yung liabilities, of course, at fair value. Then, credit siya ng contingent consideration payable, the 100,000, no? And then, credit siya ng common stock at 10 per par. Kasi nga, diba, it issued 80,000 shares at 10 per par at 800,000. And then, yung additional paid in capital was the excess of the fair value, which is 40, and par 10 times 80,000 shares, the number of shares. 80,000 shares, yung number of shares issued. Okay, that's 2.4 million. To record the acquisition-related cost, that's still debit to acquisition expense of amounting to 50,000, and then additional paid in capital for the stock issuance cost 30,000, and credit cash for 80,000. Okay, so what if may changes in the fair value of the contingent consideration? So changes that are result of the acquirer obtaining additional information about facts and circumstances that existed at the date of acquisition at acquisition date in that occur within the measurement period, which is normally, di ba, 1 year. Yung measurement period natin is 1 year from the acquisition date. So recognized as adjustment against the original accounting for the acquisition, and so may affect the goodwill or bargain existed at the date of acquisition. Okay, so changes resulting from events after the acquisition, for example, yung meeting the earnings target, if yan yung contingent natin, consideration, are not measurement period adjustment. So accounting for such, so kung after na siya sa measurement period, hindi na siya adjustment, no? So accounting for such change depends on whether the additional consideration is an equity or cash or other assets paid or owed. If it's equity, the original amount is not remeasured. However, if it's a liability or what is yung consideration natin is cash or other assets paid or owed, the change amount is included in the profit or loss. Again, so if may change tayo, if within sa measurement period, that's an adjustment to goodwill. So if ano na siya, if after the measurement period, meaning after na siya sa 1 year na measurement period natin, then yung changes shall be considered or i-recognize natin in profit or loss. So, assuming the illustration kanina, so if the measurement period, if during the measurement period, the contingent consideration was revalued based on additional information, the estimated liability and the goodwill or gain in acquisition would be adjusted. So, for example, Diba, yung fair value natin kanina ng contingent consideration is 100,000. But if mag-increase siya to 160,000, then may additional goodwill kasi mag-increase man siya from 100,000 to 60,000, yung contingent consideration natin would be increased by 60,000. So, pag mag-increase siya, then it shall be debited to goodwill at 60,000 and contingent consideration to 60,000. Okay, so again, if mag-change yung value ng contingent consideration within the measurement period, that's an adjustment to goodwill. However, if the estimate is given after the measurement period, the adjustment is included in the profit or loss of the latter period. For example, if the estimate was revised to 200,000 after the measurement period, the 40,000 increase will be recorded as follows. Okay? So, since after na siya reporting period, it will not be adjusted na in the goodwill or bargain. So, i-adjust na siya sa profit or loss. So, that shall be considered as a loss on contingent consideration kasi nag-increase siya from 160 naging 200. So, then i-credit natin to contingent consideration payable. Okay, so, what if may changes din sa value ng assets acquired, liabilities assumed, and also some parts or some included in the contingent in the consideration transfer. So during the measurement period, the values assigned to the accounts recorded as part of the acquisition may be adjusted to reflect the value of the accounts as of the acquisition date. So changes in the value caused by events that occur after the acquisition date that are not part of these adjustments. Okay? So, pag after na siya, after the measurement period, so, they would be adjusted to income in the period they occur. Okay? So, same thing then, if yung changes is within the measurement period, then, adjust siya to goodwill. However, if after na, then, di na siya i-adjust kay goodwill or kay bargain. Okay? Kasi nga, the value recorded in the acquisition date are considered provisional. So they must be used in the financial statements with dates prior to the end of the measurement period. So the measurement period ends when the improved information is available or it is obvious that no better information is available. So, but in no case the period exceeded 1 year from the acquisition date. Okay. For example, let's return on the acquisition of J&J company. The provisional value of the building was 900,000, okay? But the revised value of the building is 950,000, okay? So you take note that there is an increase of the fair value of the building of 50,000. So to record that one, to record the increase, mag-debit ka lang ng building and credit ka ng goodwill. So goodwill will absorb the impact of the adjustment. Had there been a gain at the original acquisition, the gain would be adjusted at the end of the measurement period since the gain was recorded in the prior periods. So the entry to adjust the gain would be made to retain earnings. Okay? So that ends our discussion. Let's have another sample discussion in the succeeding videos.